A question I get a lot is this: when does it actually make sense to move beyond firms like Vanguard or Fidelity and work with a dedicated wealth manager? First, I want to be very clear about something. Vanguard and Fidelity are excellent firms. They're especially good for working professionals who are accumulating wealth for retirement. Low cost, diversification, automation, and discipline are all powerful. For many people, those platforms work extremely well for a long time. The shift usually does not happen because the firms stop being good. It happens because the problem set changes. For most households early on, the goal is accumulation. Save consistently, invest efficiently, and avoid big mistakes. Taxes matter, but they're mostly about deferral. Portfolios are relatively simple, and decisions are reversible. Around $5 million of net worth, things start to look a little different. At that point, a much larger share of wealth is usually in the taxable accounts. Capital gains often matter more than ordinary income. Clients may have concentrated stock, equity compensation, real estate, or business interests. Estate planning stops being theoretical. Decisions become harder to unwind. The biggest shift is that advice stops being about picking funds and starts being about coordination. Coordination across taxable accounts, retirement accounts, trusts, charitable strategies, and long-term goals. Coordination across years, not just quarters. Coordination that focuses on after-tax outcomes rather than pre-tax returns. Large platforms are not designed to do that kind of granular planning at the household level. This is not a criticism. It's a scope limitation. They are built to deliver excellent, scalable advice to millions of investors. Custom modeling and sequencing decisions simply do not fit that model. Another subtle change is behavioral. Early in life, the risk is usually doing too much, chasing returns, timing the market, or abandoning a plan. At higher levels of wealth, the risk often flips. People become paralyzed by taxes, hold concentrated positions too long, or avoid good decisions because they feel permanent. That is where thoughtful wealth management can add value, not by making portfolios more complex, but by making decisions clearer. So the question is not, are Vanguard or Fidelity good? They are. The question is whether your financial life has reached a level of complexity where coordination, tax strategy, and decision sequencing matter as much as investment selection. That is typically when wealth management starts to make sense.